Okay, let's get back to the market story. I mentioned some weakness and maybe some second thoughts from investors who were really pushing aggressively into the equity world to start 2023. Let's get some perspective now from Bryden Teich, partner and portfolio manager at Avenue Investment Management. Nice to see you.
Great to be here with you in person.
I somehow feel like you're not surprised by the fact that investors are now taking a second look after that big start to the year.
Yeah, I think what's interesting is that I would say that there's a lot of factors that precipitated the rally that we saw in the last month and a half that were, I guess, non-fundamental based. And at the same time, I think the narrative at the beginning of the year was that the Fed was going to hike one more time and then that was it. You know, maybe the Fed would even potentially start cutting rates in the second half of this year. And I think with the inflation data and I think the resiliency in the economy that we've seen so far this year, I think that's now on the back burner. And I think that people have to then come in and reevaluate sort of positioning and their views on the year based on that.
And I've got an economics degree, and I know there's a lag with monetary policy. Is there, on the other side of all this, a potential that maybe we were just overreacting to everything? Not to say that 8 interest rate increases in a row isn't going to potentially lead to something complicated. But if the economy is strong enough, and there are at least some signs that inflation might be easing, arguably we'll have an even better read of that once we get into, call it, March or April, than looking at January numbers. Maybe we've just been overreacting and investors got it right by coming back into stocks.
That's certainly a potential. I would say that's not something that I would completely dismiss. And the one kind of counter to that, I would say, is that the forward-looking economic data is clearly, I would say, pre-recessionary. I think the standout is that employment remains relatively strong. We had a good employment number the last month. Certain segments of the employment market, like one leading indicator we like to look at is the temporary hiring, temporary jobs, and that has started to roll over. But meanwhile, construction, employment, and trucking, which are cyclical, are at all-time highs. So that's not consistent with a weak employment market. And I think it's the employment market that I think is continuing to make an argument that the economy is stronger than people think. But at the same time, forward-looking data says that a recession is not too far away from here.
Look, I'm just going to throw this out there. That COVID pandemic really complicated the way the economy works. And I mean, we just covered, I know Air Canada shares are down this morning, but overall, their business has been booming because you've had a lot of people who have this great desire to get out and spend. So people are maybe spending less on stuff that they were buying at home, but now the services industry is busy. So these are very unusual times in terms of how economic cycles work, arguably influenced entirely by the pandemic.
Yeah, I would agree. I would say that we had a goods boom a year and a half ago, and we had a services boom like through the last year. And I think the question will be, what does the follow through come from? And to your point earlier is we've now raised rates aggressively. Rates are very high. We have a lot of debt, both government and private level debt.
Yeah.
And so all of that will feed through with a lag. And I think the question, for investors is where do we go from here for 2023?
Well, a lot of those investors tune in because they want to get perspectives on how you're thinking about the markets right now. So let's dive into that. So what do you like in the equity world right now?
I think the one thing we've really tried to focus on in the last year is really trying to find companies that are unique in their ability to have pricing power. And I think that what you're starting to see is, even Air Canada, I think the headline number was, record revenue. There's a lot of companies that are having record revenue, but they're also now having huge surges in their cost structure as well. So as we slow down, I think that...
Can I just ask our control room, if we have time, can we show Air Canada shares this morning? Because to your point, revenue strong, cost pressure is a reality, and the market voting on that.
Investors, investors should care about profits, and I think there's a lot of companies that have had a record revenue, and we're trying to find companies that have been able to maintain margin in that. And so, certain sectors of the economy, whether it's industrials, certain segments of the consumer market have been strong, but really that focuses on pricing power, and I think that that is our best way to get through a slower economy. Companies that can toggle their cost structure and maintain some level of profitability where others like Air Canada won't be able to do that.
Yeah, well, I mean, we had talked to an analyst about Deere in the U.S. as a company that has sort of a nice few variables that are potentially allowing them to get people buying their stuff.
Yeah.
I mean, are there any examples here in Canada of companies that you like that have that pricing power?
Off the top of my head,
or anywhere really.
Yeah, I would say there's the two that the one specifically I would highlight is a company in the U.S. called Atcor, which is sort of in an industrial business in the U.S. Mcor is another one. These are very specific niche businesses. Atcor does a lot of supplier for copper conduit, PVC piping. The quarter last a week ago, they had great numbers. They're sort of at record backlogs, and so there's certain segments of the market and the economy that are actually still really strong. So a name like Atcor is one that I would highlight. Mcor similarly has a specialty in mechanical and construction engineering, and they've really had a strong last 18 months. So those are kind of the niche businesses we're looking for that we think can maintain pricing power even in a slower economic backdrop.